On my first day of training at the IRS, the instructor wrote two numbers on the whiteboard: $600 billion and $130 billion. Does anyone know what these numbers represent? She asked. Nobody did. The first number, she explained, is how much wealthy Americans legally avoid in taxes every year. The second number is how much our entire agency's budget would need to be to audit them all. Then she smiled, not a happy smile, a sad one, and said, "We'll never get that budget. So we audit the poor instead. They can't afford lawyers." The room went silent. I raised my hand. Wait, we knowingly let rich people cheat on their taxes because we don't have enough staff. She shook her head. Not cheat. Avoid. Legally. That's the difference you'll learn here. The rich don't break the law. They write it. That was 6 years ago. Since then, I've conducted hundreds of audits, reviewed thousands of tax returns, and learned every loophole, every trick, every secret that the wealthy use to pay almost nothing while you pay everything. And last month, I quit because I couldn't be part of this system anymore. Today, I'm going to tell you everything they never wanted you to know. My name is Sarah Mitchell, and I never intended to become the person who exposes the tax system. I grew up in a middle-class family in Ohio. My dad was a mechanic. My mom was a nurse. They worked hard, paid their taxes, and raised me to believe that taxes were the price of living in a civilized society. Roads, schools, hospitals, all funded by our collective contribution. I studied accounting at Ohio State University, graduated with honors in 2016, and like many accounting graduates, I had a choice: go into private practice and help rich people pay less taxes, or go into public service. I chose public service. I wanted to make a difference. I wanted to ensure the system was fair. The IRS recruitment process was surprisingly rigorous. Background checks, financial reviews, aptitude tests, interviews. They wanted to make sure we were honest, detail-oriented, and capable of understanding complex financial documents. In 2017, at age 24, I was hired as a tax examiner at the IRS Cincinnati office. My starting salary was $42,000 a year. Not great, but it came with federal benefits, job security, and, I thought, the satisfaction of serving the public good. I was excited, nervous, but excited. I thought I was joining the good guys. Training lasted 6 weeks, and that's where everything started to unravel. There were 32 of us in that training room, fresh recruits, mostly young, mostly idealistic. We sat in rows of desks with our government-issued laptops, ready to learn how to protect America's tax system. Our instructor was a woman named Margaret Chen. She'd been with the IRS for 23 years. She had gray hair, tired eyes, and a slightly cynical smile that I didn't understand at first. Now I do. The first week was basic stuff: tax code fundamentals, how to read a tax return, what deductions are legitimate, what red flags to look for, standard training. But on the 5th day, Margaret put those two numbers on the board: $600 billion and $130 billion. The tax gap, she explained, is the difference between what Americans owe in taxes and what they actually pay. Right now, that gap is approximately $600 billion per year. Most of that, about 70%, comes from underreporting by high-income individuals and corporations. Someone raised their hand. So we're going to audit them, right? The rich people who aren't paying? Margaret's smile returned, that sad smile. Here's the thing, she said, walking to her desk and pulling out a thick folder. This is a case file for a high net worth individual. someone worth over $50 million. Auditing someone like this takes approximately 1,000 to 3,000 hours of agent time. Do you know why? We shook our heads. Because they have teams of lawyers and accountants whose entire job is to make their finances as complicated as possible. Shell companies in Delaware, trusts in Nevada, offshore accounts in the Cayman Islands, real estate holdings in 12 states. They spread their wealth across hundreds of entities specifically to make it difficult to audit. She opened the folder and showed us page after page of corporate structures, financial statements, and legal documents. It looked like a spider web. Now, she continued, compare that to auditing someone who makes $40,000 a year. Their return is simple: W-2 income, maybe a home mortgage deduction. Takes about 4 hours to review. And if we find an error, they can't fight back. They can't afford to. I raised my hand, but that's not fair. We should be going after the people who owe the most, not the people who are easiest to catch. Should, Margaret repeated. Yes, we should. But the IRS budget has been cut by 20% over the last decade. We have fewer agents now than we did in the 1970s, even though the population has doubled and the economy is 3 times larger. We don't have enough staff to audit the wealthy, so we audit the poor. They're cheaper. The room was silent. This wasn't what any of us had signed up for, but Margaret wasn't done. Here's what you need to understand, she said, her voice dropping. The American tax system is regressive by design. It's structured to extract maximum revenue from the middle and working classes while providing maximum flexibility for the wealthy. Your job as IRS agents is to enforce this system, not to question it, not to fix it, to enforce it. That's when I knew something was very, very wrong. After training, I was assigned to the examination division, which handles audits. My job was to review flagged tax returns and determine if further investigation was needed. If I found discrepancies, I'd escalate to senior agents who would conduct full audits. In my first year, I reviewed 287 tax returns. Want to guess how many of them belonged to people making over $1 million per year? 3. 3 out of 287, that's roughly 1%. And you know what the national percentage of taxpayers earning over $1 million is? About 0.5%. Which means we were auditing wealthy people at only twice the rate of everyone else, despite them being responsible for the majority of unpaid taxes. The other 284 returns, people making between $20,000 and $75,000 per year. Nurses, teachers, construction workers, retail managers, the exact people who can least afford an audit. I asked my supervisor, a man named Robert Torres, why the distribution was so skewed. It's about the Earned Income Tax Credit, he explained. Low-income people claim the EITC and it's prone to fraud, so we audit those returns more aggressively. But the fraud is usually accidental, I protested. They make mistakes because the forms are complicated. Meanwhile, rich people are deliberately hiding income offshore and we're not touching them. Robert sighed. Sarah, listen to me. A high net worth audit requires specialized agents. We have maybe 2,000 agents in the entire country qualified to audit complex returns. And there are over 700,000 households making more than $1 million per year. Do the math. We can't audit them all. We don't have the resources. So we just let them get away with it. They're not getting away with anything. They're using legal tax strategies written into the tax code by Congress. Strategies that Congress wrote because the wealthy lobby them to write it that way, I shot back. Robert didn't disagree. He just looked tired. Welcome to the IRS, Sarah. Everything changed for me in my second year when I was assigned to assist on a high net worth audit. This was unusual for someone at my level, but the senior agent needed help with basic documentation review, and I was available. The taxpayer was a hedge fund manager. I can't tell you his name for legal reasons, but I can tell you his net worth was estimated at $1.4 billion. With a B, I spent 3 weeks reviewing his tax return. It was 347 pages long, and his total federal income tax liability, $18,000. Let me put that in perspective. A nurse making $60,000 per year pays about $8,000 in federal income tax. A teacher making $50,000 pays about $5,500. This billionaire, someone who made more in a single day than most Americans make in their entire lives, paid roughly the same as 3 teachers. How is that possible? I went through his return line by line, and this is what I found. His official income on his return was $350,000, not $1.4 billion, not even $10 million, just $350,000. Where did the rest of his wealth come from? Capital gains, stock options, real estate appreciation, all of which are taxed at much lower rates than ordinary income, or in many cases, not taxed at all until you sell the asset. But it gets better. Out of that $350,000 in reported income, he had $290,000 in deduction. Charitable donations to his own foundation, which employed his children. Business expenses, his private jet classified as a business necessity. Investment losses from previous years carried forward indefinitely. After all the deductions, his taxable income was $60,000. And on that $60,000, he paid $18,000 in taxes. Meanwhile, he owned 4 homes, a yacht, a private jet, and had an investment portfolio worth over $1 billion. But according to the U.S. tax code, his tax burden was equivalent to someone working as a mid-level office manager. I brought this to the senior agent. "This can't be right," I said. He barely looked up from his computer. "Is anything on this return illegal?" "No, but..." "Then close the file. Everything's legal. That's all we care about." "But it's not fair," I insisted. He finally looked at me. "Sarah, fair has nothing to do with it. Our job is to enforce the tax code as written, not as we wish it was written." This guy has a team of CPAs and tax attorneys who spent thousands of hours structuring his finances to minimize his tax liability. It's all legal. It's all documented. There's nothing we can do. So he just wins? He already won 30 years ago when he got rich enough to hire people smarter than us. That night, I went home and couldn't sleep. I kept thinking about that billionaire's $18,000 tax bill. I thought about my parents, who together paid almost that much in taxes while making a fraction of his wealth. I thought about every teacher, nurse, firefighter, and construction worker in America who pays a higher effective tax rate than a billionaire. And I realized something that made me sick to my stomach. The system isn't broken. It's working exactly as designed. Over the next 2 years, I started paying closer attention to who we actually audited. And a pattern emerged, a disturbing, undeniable pattern. The IRS has something called the Discriminant Function System, or DIF score. It's an algorithm that flags tax returns for potential audits based on statistical anomalies. If your deductions seem too high for your income level, you get flagged. If you claim certain credits that are frequently abused, you get flagged. Sounds fair, right? Use data to find fraud. But here's the problem. The algorithm is calibrated primarily on middle and low-income returns because that's where most of our historical audit data comes from. We've been auditing poor people for decades, so our system is trained to detect poor people's mistakes. The algorithm doesn't know how to detect wealthy people's sophisticated tax avoidance because we haven't audited enough of them to teach it. The result? The IRS audits people who claim the Earned Income Tax Credit, a program designed to help working poor families, at nearly the same rate as people making $500,000 to $1 million per year. Let me say that again. If you're a single mother making $25,000 a year and claiming the EITC, you're almost as likely to be audited as someone making $750,000. Does that sound like a fair system to you? I started tracking the audits I was involved with. In my third year at the IRS, I personally reviewed 312 tax returns. Here's how they broke down. Returns under $50,000, 198, 63%. Returns $50,000 to $100,000, 89, 29%. Returns $100,000 to $500,000, 22, 7%. Returns over $500,000, 3, 1%. Meanwhile, data shows that people making over $10 million per year underreport their income by an average of 20%. People making under $50,000, less than 5%. We were spending the vast majority of our time auditing the people who cheat the least, while ignoring the people who cheat the most. Why? Because it was easier, cheaper, faster, and because the wealthy fought back. In my fourth year, I finally got assigned to a solo audit of a moderately wealthy individual. Not a billionaire, just a successful business owner with a net worth around $15 million. His return had been flagged because he claimed $400,000 in business deductions, which seemed high. I sent him a standard audit notification letter. Within 48 hours, I received a phone call from his attorney. "Ms. Mitchell," the attorney said, his voice smooth and confident. "I represent Mr. Name Redacted. I understand you've initiated an audit. I'm calling to inform you that we will be vigorously contesting every aspect of this examination." "That's your right," I said, "but I'm just doing my job." "Of course. And I'm doing mine. I want you to know that we've already filed a complaint with your supervisor regarding the audit criteria. We believe this examination is politically motivated and constitutes harassment." I was stunned. Politically motivated? I don't even know your client's politics. Nevertheless, we've made the complaint. Additionally, we'll be requesting all documentation regarding why this particular return was selected for audit, the IRS's procedures for audit selection, and any communications between IRS personnel regarding this case. We're prepared to take this all the way to tax court if necessary. He paused, letting that sink in. Then his tone changed, became almost friendly. "Or," he continued, "you could close this audit as no change. We could all move on with our lives. Your supervisor would be happy. One less case on the books. You'd be happy. No more headaches. And my client would be happy. Everyone wins. Except the American taxpayers who deserve to know if your client owes money," I said. "Ms. Mitchell, my client has paid more in taxes in a single year than most Americans pay in a lifetime. He's a job creator, an employer, a pillar of his community. Is it really worth spending thousands of taxpayer dollars to audit a deduction that, even if disallowed, which it won't be, would result in maybe $30,000 in additional tax? That's your time for the next 6 months, fighting us every step of the way. Is it worth it?" I wanted to say yes, I wanted to tell him to go to hell. But the truth was, he was right. The audit would take months. It would be contested at every turn. And even if I found something, the amount recovered wouldn't justify the cost. I closed the audit as no change. That night, I went home and cried because I realized I'd been beaten. Not by being wrong, but by being outgunned. The wealthy don't avoid audits because they're innocent. They avoid consequences because they can afford to fight. In my 5th year, I was temporarily assigned to the International Division, which handles offshore tax issues. This is where I learned about the biggest scam in the entire tax system. Americans are required to report all worldwide income, including money earned or held in foreign accounts. But here's the problem. The IRS has almost no way to verify foreign income unless the taxpayer voluntarily reports it. We had a case involving a venture capitalist who had accounts in Switzerland, the Cayman Islands, and Singapore. Total estimated value, $87 million. Do you know how much of that he reported on his U.S. tax return? 0. Why? Because those countries don't automatically share financial information with the IRS. And even though there are laws requiring Americans to report foreign accounts, there's basically no enforcement. We knew he had the accounts because a whistleblower, a disgruntled former business partner, provided us with documentation. Without that whistleblower, we would have never known. The case went to a senior agent who specialized in offshore investigations. She spent 18 months building a case. She documented everything. She proved beyond any doubt that this man had hidden $87 million offshore to avoid taxes. The result? He paid back taxes of $12 million plus a penalty of $6 million. Total, $18 million. Sounds like justice, right? Except that if he had reported that income properly in the first place, he would have owed approximately $32 million in taxes. So even after being caught, even after an 18-month investigation, even after paying penalties, he still came out ahead by $14 million. And that's assuming he doesn't immediately find new ways to hide the remaining $69 million. The senior agent who worked the case retired 6 months later. I asked her why. Because I'm tired of winning battles and losing the war, she said. For every one of these guys we catch, there are 100 we don't. And even when we catch them, they barely get a slap on the wrist. What's the point? Here's something most people don't know. The complexity of the tax code isn't an accident, it's a feature. Every year, Congress passes new tax laws. And every year, those laws are written by lobbyists working for wealthy individuals and corporations. They deliberately make the code more complex, adding loopholes and carve-outs that only benefit their clients. Why would they do this? Because complexity creates opportunities. If the tax code was simple, a flat tax, or even just a progressive tax with no deductions, wealthy people couldn't game it. But with 70,000 pages of tax code and regulations, there are endless opportunities to shift income, defer taxes, and create structures that minimize liability. And here's the really insidious part. Every time someone proposes simplifying the tax code, the wealthy lobby against it. Not because simplification is bad for America, but because it's bad for them. I saw this firsthand when a new provision was proposed that would have closed a loophole, allowing hedge fund managers to classify their income as carried interest and pay lower capital gains rates instead of ordinary income rates. Within weeks, Congress was flooded with lobbying from financial firms. Campaign contributions flowed. Op-eds appeared in major newspapers arguing that closing this loophole would hurt investment and cost jobs. The provision was killed before it even came to a vote. Meanwhile, proposals to increase IRS funding, which would allow us to actually audit wealthy tax cheats, are routinely blocked by the same politicians who receive millions in donations from the financial industry. It's not a conspiracy, it's just business. The wealthy have the resources to influence the system, and they use those resources to protect their wealth.
Here's something most people don't know. The complexity of the tax code isn't an accident, it's a feature. Every year, Congress passes new tax laws, and every year those laws are written by lobbyists working for wealthy individuals and corporations. They deliberately make the code more complex, adding loopholes and carve-outs that only benefit their clients. Why would they do this? Because complexity creates opportunities. If the tax code was simple, a flat tax, or even just a progressive tax with no deductions, wealthy people couldn't game it. But with 70,000 pages of tax code and regulations, there are endless opportunities to shift income, defer taxes, and create structures that minimize liability. And here's the really insidious part. Every time someone proposes simplifying the tax code, the wealthy lobby against it. Not because simplification is bad for America, but because it's bad for them. I saw this firsthand when a new provision was proposed that would have closed a loophole allowing hedge fund managers to classify their income as carried interest and pay lower capital gains rates instead of ordinary income rates. Within weeks, Congress was flooded with lobbying from financial firms. Campaign contributions flowed. Op-eds appeared in major newspapers arguing that closing this loophole would hurt investment and cost jobs. The provision was killed before it even came to a vote. Meanwhile, proposals to increase IRS funding, which would allow us to actually audit wealthy tax cheats, are routinely blocked by the same politicians who receive millions in donations from the financial industry. It's not a conspiracy, it's just business. The wealthy have the resources to influence the system, and they use those resources to protect their wealth.
Over my 6 years at the IRS, I came to understand something that most Americans don't realize. The IRS exists primarily to maintain the illusion of fairness while actually enforcing inequality. Think about it. If the IRS truly wanted to maximize tax revenue and enforce fairness, we'd focus all our resources on high net worth individuals and large corporations. They're where the money is, they're where the cheating happens. But we don't do that. Instead, we audit poor people, wage garnish people who can't afford to fight back, and let billionaires hire armies of lawyers to exploit every loophole in the code. Why? Because the alternative, truly enforcing tax law equally, would require political will that doesn't exist. It would require Congress to adequately fund the IRS, close loopholes, and simplify the code. But Congress won't do that because Congress is funded by the very people who benefit from the current system. The IRS is trapped in the middle. We're given an impossible mandate: enforce a tax code that's deliberately designed to be unenforceable against the wealthy, and do it with inadequate resources. And when we fail, when the tax gap grows, when inequality increases, when Americans lose faith in the system, who gets blamed? We do. The IRS agents, the faceless bureaucrats. Not the politicians who write the laws, not the lobbyists who influence those laws, not the billionaires who exploit those laws. U.S. We're the scapegoats for a system that was rigged from the start. Last month, I submitted my resignation. After 6 years at the IRS, I'm done. People ask me why I'm walking away from a stable government job with good benefits. The answer is simple. I can't participate in this system anymore. I can't audit school teachers while billionaires go free. I can't enforce laws that are designed to protect the wealthy at the expense of everyone else. Some of my former colleagues think I'm naive. They say, "You can't change the system by leaving it. Stay and fight from inside." But I tried that. For 6 years, I tried. I documented everything, I reported up the chain, I suggested reforms, and nothing changed because the system doesn't want to change. The day I turned in my resignation, my supervisor asked to speak with me privately. "You're making a mistake," he said. "You're a good agent. We need people like you." "You need people who are willing to enforce an unjust system," I replied. "That's not me anymore." "What will you do instead?" "Tell people the truth. Because if Americans really understood how their tax system works, they'd burn it down and start over." He didn't try to stop me after that. So what's the answer? How do we fix this? The solutions are actually pretty simple. They just require political will that currently doesn't exist. First, dramatically increase IRS funding. We need more agents, better technology, and the resources to actually audit high net worth individuals. Every dollar spent on IRS enforcement returns approximately $5 in additional revenue. It's the best investment the government can make. Second, simplify the tax code, eliminate most deductions, close offshore loopholes. Make it so hard to hide income that the cost of trying exceeds the benefit. Third, increase transparency. Require all income, including capital gains, to be reported in real time by financial institutions. No more honor system for billionaires. Fourth, equalize tax rates. There's no moral justification for taxing investment income at lower rates than wage income. Someone who makes money by working shouldn't pay a higher rate than someone who makes money by owning things. Fifth, institute a wealth tax. Income tax only captures money when it changes hands. But most billionaire wealth is in appreciating assets that never get taxed because they never sell them. Tax the wealth itself. Will any of this happen? Probably not, because the people with the power to change the system are the same people who benefit from keeping it broken. But at least now you know the truth. Here's what you need to understand. The American tax system is not designed to be fair. It's designed to extract maximum revenue from the people with the least ability to resist, the working and middle classes, while providing maximum flexibility to the people with the resources to game the system. You pay your taxes honestly because you have to. Your employer reports your income directly to the IRS. Your bank reports your interest. There's no hiding it. But if you're wealthy enough, you can hire accountants to structure your income as capital gains instead of wages. Create shell companies to shift profits to low-tax jurisdictions. Use trusts and foundations to shield assets from taxation. Donate to politicians who will protect these loopholes. Hire lawyers to fight any audit until the IRS gives up all of it legal. All of it deliberately designed into the system. And when you hear politicians talk about tax reform, pay attention to who benefits. If a reform makes the code more complex, it benefits the wealthy. If it cuts the IRS budget, it benefits the wealthy. If it reduces rates on capital gains or eliminates the estate tax, it benefits the wealthy. True tax reform would be simple. Fund the IRS adequately, close loopholes, tax all income equally. But that will never happen because the people who write the laws benefit from the current system. It's been 3 months since I left the IRS. I'm working as a consultant now, helping middle-class families navigate the tax code and find legitimate deductions they're entitled to. I make less money than I did at the IRS, but I sleep better at night. I still think about my former colleagues. Good people, most of them trapped in an impossible situation. They didn't create this system. They're just trying to do their jobs with inadequate resources and contradictory mandates. But I also think about that school teacher I made wait 6 months for her refund, about the families who lost homes because we garnished their wages over disputed tax bills they couldn't afford to fight, about the millions of Americans who pay their full share while billionaires pay almost nothing. And I think about those two numbers on the whiteboard on my first day of training: $600 billion and $130 billion. $600 billion in taxes that go unpaid every year, mostly by wealthy Americans. $130 billion to actually enforce the law. We'll never get that $130 billion. Congress will never appropriate it, because the people who would be held accountable are the same people funding Congress. So the tax gap will continue to grow. The middle class will continue to shoulder the burden, and the wealthy will continue to pay lawyers instead of taxes. That's the real truth about the IRS. That's the disturbing reality of how taxes really work in America. And now you know it too. The question is, what are you going to do about it?